Is the stock market, and more specifically AMC, about to go through the Santa Claus rally? And this is not a term that I make up because I wear a Santa hat in the month of December. This is an actual term we will go over here in this video and go over why I think a Santa Claus rally is actually more likely than not, and then what to expect after the Santa Claus rally in January and February, because there is going to be some level of fear still existent in the marketplace that I do want to go over. And that's a bullish thing for AMC. We know a couple things have to happen to actually cause the MOAS. One of two things. We either get some crazy catalyst that pushes AMC much higher on a fundamental valuation, which we have got a lot of those catalysts that really haven't done too much. Second thing we need is to ultimately see the liquidity dry up in the marketplace. And we've went over a lot of that, what is going to cause that. So I don't want to focus on that too much until we get into the segment of January and February, what I really expect after this Santa Claus rally. So hopefully that made some sense. Let's get straight into this video. So first and foremost, let's start off with what is the Santa Claus rally. Like I said, it's not just me making this up. Santa Claus rally. A Santa Claus rally describes a sustained increase in the stock market that occurs in the last week of December through the first 2 trading days in January. There are numerous explanations for the cause of a Santa Claus rally, including tax considerations, a general feeling of optimism and happiness on Wall Street, and the investing of holiday bonuses. Another theory is that some very large institutional investors, a number of which are more sophisticated and pessimistic, tend to go on vacation at this time, leaving the market to retail investors who tend to be more bullish. So that is the term for the Santa Claus rally. This is Investopedia. It's not something, like I said, that I make up. And I do apologize for the camera. I just got a new camera and it likes to refresh its lenses. So if it does that, that's what that is. But we are still here. So that's exactly what the Santa Claus rally is. December is historically the strongest month of the year for the stock market. A lot of people start to position for next year, which is going to be 2022, right? So that's the situation with that. Really, this is all going to come down to the Fed and how they take their stance. What we know and what the markets are priced in. Keep in mind, this meeting is this upcoming week, December 14th and the 15th. That is Tuesday and Wednesday. But what is priced in, what we expect to happen is a faster tapering, 2 to 3 times faster than what we had initially gotten, right? Fed Jerome Powell said they will start tapering likely in the month of December and end tapering around July. We expect this to end more than likely around March, even possibly February. If we get an announcement along those lines of the market's expectations, I think we're definitely going through a Santa Claus rally. If he comes out, Fed Jerome Powell comes out and he's saying, hey, we got to raise interest rates starting in January or February, and then 3 more interest rate hike increases throughout the year of 2022, that's not going to be a good thing. And that could derail the Santa Claus rally, no doubt whatsoever. But if that does happen, some sectors will still do okay. But as we do know, as I've went over many times, the market is propped up currently by a couple key names that are hitting all-time highs. Apple, Google, Nvidia, Microsoft, Facebook, Amazon, all of these stocks control over 20% of the marketplace, and these are high growth stocks. They're not your risky high growth stocks, which are already in bear markets, but they control 20% of the stock market. So if the stock market does head down, this is going to cause short-term pain, but ultimately it will restrict that capital, and we will be very close and prone to seeing the MOAS, as we do know hedge funds are severely overweighted in leverage. So that's the current situation. That's what the Santa Claus rally is. It's really going to come down to the Fed, like I said, but a lot of people are still calling for a Santa Claus rally in general. I know you guys don't like him, but Jim Cramer says charts suggest the S&P 500 is set up for a year-end Santa rally. And a lot of these headlines are talking about the Santa Claus rally. And I do think a lot of the tax loss harvesting, which, if you guys are unaware of that, that's basically you sell stocks that you're down on to write those losses off on your taxes. I think a lot of that has actually already happened during this last sell-off. And the S&P 500 overall does look pretty good. And I have GameStop pulled up right now, so I'll do the SPY, the S&P 500 ETF. And we're close to hitting all-time highs. AMC has been getting beaten down though, but I do think rising tides lift all boats. So I do think AMC would go up in the short term during the Santa Claus rally. And then now let's talk about the fear that will still be in play after December, heading into January and February, that will restrict capital, in my personal opinion, and get us one step closer to the MOAS. If not, just full on MOAS status. It's going to be, I think Evergrand is going to cause a lot of fear in the marketplace. We do know they just defaulted on their bond obligations to foreign investors. It says right here, Evergrand defaults on 1.2 billion in foreign bonds. Fitch says, and as China intervenes, they have only sent people into Evergrand to try to figure out what they can pay, how to stay out of default. That has obviously not happened, and it doesn't look like China is actually going to save the company. They're not likely to bail out the entire company. So there's definitely going to be some lasting effects of this, and the financial media is not covering this. And this whole situation started in August 2021, and they were never in official default until the last 2 days or so. So this is something that will definitely come back up and something to consider. On top of that, we do know we have the new SEC proposed rule change for short sellers that is supposed to be and hopefully approved by the first really 2 months of 2022. This will essentially give us access into all of the short positions, what kind of collateral the hedge funds are using, what their interest rate is or their cost to borrow rate, how many shares they have sold short, all of this information that we don't know about. So when you add the liquidity being restricted due to external factors, and then us being able to see all of the short positions, how much they have been paying, who is short on AMC, GameStop, or any other stock, that's going to cause an immense amount of pressure on the hedge funds due to their over leveraging that they are doing at the current moment, 7, 8, even up to 10 times over leverage. That could lead to the MOAS in January and February. But on top of that, for AMC, we are seeing a lot of option activity that is obviously not looking too good right now, with a lot of puts that are in the money for this big expiration that is January 21st, 2022, but also expiring December 17th. So I do think this will suggest and help support the Santa Claus rally. And what I mean by this, obviously, I'm sure you guys already know this, but when puts go from out of the money into the money, the market makers, they have to go out on the open market and short stock into the open market, flooding the market with supply, driving the share price down. And that's exactly what we have been seeing going on, with a record 101,000 puts that are currently in the money, with only 17,000 calls that are out of the money, compared to 325,000 calls that are out of the money, or 17,000 calls that are in the money. Now, when the stock does rally and when the markets rally after the Fed meeting, that's exactly what I expect to happen. You're going to see these puts run from into the money out of the money. And when that happens, the market makers, they have to de-hedge, and the way they de-hedge is buying shares. At the same time, the calls go from out of the money back into the money, with only 2 or 3 days left to expiration until December 17th. You're going to see a lot of short-term buying power head back into AMC. So I do expect somewhat of a Santa Claus rally. The end of this week, like we went over earlier in the price prediction video, I think Wednesday, Thursday, and Friday should be very bullish for AMC, and then the next couple of weeks should be bullish as well. And that's exactly what I want to happen. I hope you guys are following along with me. Until we do get these fear catalysts that come back up and you start to see the markets selling off, AMC will sell off along with the overall markets. But after the Santa Claus rally, I do expect AMC to be over $35 per share, in between $35 and $45 per share. We want to make a nice recovery during this Santa Claus rally and then get the fear that comes back to drive the price back down to these $25 levels. Why I am saying this is because we would still only come back down to the levels that we are at right now during the fear until we see the MOAS. If fear continues in the marketplace and we don't see a Santa Claus rally, we could come down to, in my opinion, $20 per share. So we want to stay at a higher level before the MOAS happens. It'll be a smaller price increase, or on paper it will look like that when the MOAS is actually happening, but yet we will be shooting through the roof. So hopefully that makes some sense, you guys. But even on top of that, supporting the Santa Claus rally, and that's, through the rest of December after this Fed meeting, we still have incredibly low volume. And a lot of people are confused on why you want to see low volume when you're looking at potential massive short squeezes like AMC and GameStop. And it comes down to the simple fact of low volume means less traders. Like, there's virtually no traders in AMC. I won't say no traders because there's always stocks or traders in stocks, but you're probably not trading AMC, right? And that's what we're seeing is a super low volume in between, definitely higher than we were seeing, but still compared to our history of AMC during this whole squeeze and MOAS cycle we've had over the past year, still really low, in between 40 and 60 million on the higher end for volume. Even this day back here December 9th, we only seen 36.5 million for volume. Now, suggesting not a lot of traders. That means people are not really willing to pay too much to buy the stock. They're not willing to sell the stock for too little. Hopefully that makes sense. The bid and the ask. Now, when you see this low volume, when people are holding the stock and you see traders head back into the stock, they are willing to pay more and they want to get in these positions fast. So imagine this. Just stick with me here. Imagine just regular trading. Somebody's willing to buy the stock for $40, right? A trader comes in, they're willing to buy that stock for $40.25. And then another trader comes in, they're willing to buy that for another 20 cents higher, so on and so forth. That's where you get the big increases in share price with low volume heading into high volume, just like we seen back here in January, going from 20 to 60 million on a daily average for volume at $1.91, and then head all the way up to $20 per share when all of these traders headed into the stock with 1.2 billion shares that traded hands. Volume dies down, the price dies down. We stay down for a while until coming on June when a lot of people got back into the stock, but we were seeing relatively low volume days as well, in between 15 and 40 million for volume, until we started to get the big volume increases and that bullish volume and those traders that really drive the stock home. And this was another 10x increase in value. So that's basically the situation. It's really good we're still seeing low volume. Once that bullish volume comes back into the stock, long story short, you're going to see a big increase in share value. If that happens when the markets are down, I do expect the MOAS to start at that moment. Once shorts don't have money to fund their margin that they're going to need once AMC starts to rally and when other stocks are down, that's when our tendies will be printed. So that is the situation with the Santa Claus rally. A lot of people are calling for this. I do think it's going to happen myself, but I would still not be going balls to the walls and options or a lot of risky trades betting that this will happen. It's all going to come down to the Fed this week and how investors react after that. But Tuesday, Wednesday, we will know exactly what to expect if the Santa Claus rally is actually going to happen. So hopefully you guys got some value out of this video. If you did, hit that like button for me. Consider subscribing to the channel. Let me know down below in the comment section, what is your thought on this? Do you forecast a Santa Claus rally by the end of this year and then pain in January and February like I do, which will ultimately lead to a big increase in AMC share price? Or do you not agree with that? Let me know why you don't agree with that down below in the comment section. Your guys' opinions are very valuable to me, and it helps me improve as well. That's the only reason I even watch any finance YouTube videos, is to get that opinion. Like I said, check out the pinned comment down below, as well as the link for public, as well as the link for other stocks down below in the description of this video. So love and appreciate you guys. Thank you for watching this video. I will see you in the next one.